Marc-Andre, welcome. We know that governments and businesses need to work together in the transition to a low-carbon economy, but what does that look like?
Well, it takes many forms because the challenges we're facing in climate, when you think about that, government acting alone cannot do it, and actually investors acting alone cannot do it, or the civil society at large acting alone cannot do it. So you need to bring every stakeholders together, and this is why this COP is so important, and I like the motto of this COP, that is unite, act, and deliver, because it's exactly what we need to be doing. But that means we need to build trust between all of those parts, and it's not easy at a time when there's populism and all of that. What it looks like for investors, it takes the form of blended finance, and it takes the form of recognizing that not all capital has the same risk tolerance, and whether you're philanthropy or you're an institutional investor or your family office or you're a VC, private equity, everybody has different risk tolerance, but we all have a role to play in the transition. And that's how we need to come together. And I think blended finance is the solution to everything we need to be doing.
Specifically, the role of institutional investors. Talk to me about that.
Well, institutional investors are a big player. I mean, we control altogether more than half of the investable capital in the world. So we obviously need to be part of the solution. And institutional investors like CDPQ, which is largely a pension fund from Canada, Quebec, how we do that is we've set ourselves, very high targets for reduction of our carbon footprint, increasing our green assets. But where we make the most difference, the biggest difference, is actually on how we invest, making sure that each and every of our investment, we do an ESG analysis, we look at what's the impact on climate, and also how we engage with our portfolio companies. That will make a huge difference going forward. Are we engaging in depth with our portfolio company to actually make sure that they're as aligned as possible with climate? And that's a question of value creation for us.
ESG has had a rough time of it of late. I think that's probably fair to say. Where does the future lie for ESG and institutional investors, do you think?
Well, I think it's a question of vocabulary, because I think it's like, I know in some parts of the world ESG is not so popular, but at the end for us ESG is not only looking at the risk, but it's looking at value creation. You take two companies, exactly the same balance sheet, exactly the same financial numbers, but one has a leadership that is more diverse. The same one uses less water, has a smaller carbon footprint, has less of a footprint on real estate, and you can go on and on and on. Which company is valued most? The market has already said it. It's that company that actually is aligned with sustainable development has more value than the other.
So it doesn't matter what we call it, it's the principles that count.
Exactly, and for us we look at it in a way that it's value creation, it's making sure that our assets, we are a long-term asset owner, making sure that our assets are not stranded. Just think about real estate and the impact of the rise of sea levels on real estate. We need to think about it as an investor who owns real estate and will own the same piece of real estate for the next 20, 25 years.
Marc-Andre, thank you so much.
Thank you.